All right, cooler hand, you asked for it, and we are delivering a deep dive into Fiverr.
We're going deep, not just like, is this a good buy or sell?
But what is this company actually about?
Yeah, like the whole picture.
And stick with us till the end.
You've got kind of a mind bender about Fiverr and AI.
A little bit of a head scratcher.
That's gonna really make you think.
So if you're new to Fiverr, what is it?
In the simplest terms, it's a platform where freelancers and businesses can connect.
But it's more than just like your typical freelance website.
Yeah, it's way bigger than that. Think like 550 plus service categories
Wow, that's a lot.
across 9 major verticals.
9. So what kind of stuff are we talking about here?
Everything. I mean, you've got your standard graphic design, writing.
Right.
But then it goes way beyond that.
Okay, interesting.
You can find people for video editing, voiceovers, translation, even legal consultations.
Wait, legal consultations? Through Fiverr?
Yep, they've got it all.
That's wild. I had no idea.
And that's what's so interesting about Fiverr.
They're not just sticking to the traditional freelance gigs.
Exactly. They're pushing the boundaries of what's possible in the gig economy.
And the gig economy is, well, it's not just a buzzword anymore, is it?
Oh, absolutely not. This thing is exploding.
Give us the numbers. Paint the picture.
Okay, so in 2024 alone, the gig economy was worth over $500 billion globally.
$500 billion. That's insane.
And by 2032, it's projected to almost triple in size.
Triple. So Fiverr's riding a pretty massive wave here.
Absolutely. And that's what makes this deep dive so important.
Exactly, because Cooler Hand wants to know if this is a good investment or not.
Right, and understanding the market is key to evaluating Fiverr.
Now, we keep saying gig workers, but who are these people?
Well, not all gig workers are the same.
Okay, break it down for us.
Researchers have actually identified 4 main types of gig workers.
4 types.
Yep, so first you've got your free agents.
Okay, so the hardcore freelancers.
Exactly. They've chosen freelancing as their main career path. They're all in work.
The true entrepreneurs.
Then you've got your casual earners, people who are using freelancing to supplement their income.
Right. Maybe they have a full-time job and are just picking up some extra gigs.
Makes sense.
Flexibility is a big appeal for a lot of people.
Then you've got the reluctants who might be freelancing due to circumstances, but would actually prefer a traditional job.
So they're not necessarily doing it by choice.
Right. And finally, you have the financially strapped who are freelancing to make ends meet.
So it's like a necessity for them.
Exactly. A really diverse group with a wide range of motivations.
And this is important because depending on the type of worker, they might react differently to, say, Fiverr's strategies.
Absolutely. They're pushed towards using more AI.
Right. Some might be more receptive than others.
Now, it's also important to remember Fiverr isn't operating in a vacuum.
We've got competition.
Lots of it.
Who are the biggest rivals?
Well, you've got Upwork, which has a similar model to Fiverr.
Right, I've heard of them.
Then you've got TopTal. They focus more on connecting businesses with top-tier talent.
So more like a premium service?
Yeah, higher quality, but also higher prices.
Okay.
And then there's freelancer.com, a global platform with a massive user base.
All right, so tons of competition.
Yeah.
What makes Fiverr stand out from the crowd?
Well, first off, their brand recognition is huge.
Yeah, they're definitely a well-known name in the freelance space.
They've built a strong reputation globally, and that trust is a major asset.
Especially in the online world, brand loyalty is a big deal.
Exactly. And then you have the network effect.
Explain that one.
The more users Fiverr attracts, the more valuable the platform becomes for everyone.
More freelancers attract more businesses, which attracts even more freelancers, and so on.
Precisely.
Makes sense.
And Fiverr's also very tech-savvy.
Okay, so they're not just relying on their name.
No, they're using AI in a lot of cool ways.
Like what?
Matching freelancers with projects, personalizing recommendations, streamlining the hiring process.
Sounds like they're making things easier for both buyers and sellers.
Absolutely. And then there's their global reach.
Okay, how global are we talking?
Fiverr operates in over 160 countries.
Wow, that's incredible.
Which means a diverse pool of talent and clients.
So they're not limited by geography.
At all. And let's not forget their wide range of services.
Right, we talked about the 550 plus categories.
It's a one-stop shop for businesses, which is a big selling point.
Convenience is key.
And finally, Fiverr offers flexible pricing.
Meaning?
They cater to all sorts of budgets.
So you can find something whether you're a small startup or a big corporation.
Exactly. Something for everyone.
All right, so Fiverr's got a lot going for it.
It seems that way.
But what about the people running the show? Who's steering this ship?
Well, at the helm, you have Micah Kaufman, the CEO.
Has he been there long?
Since the beginning, he co-founded Fiverr back in 2010.
So he's seen it all, the ups and the downs.
Definitely. And right now, he's leading Fiverr through a pretty big strategic shift.
A strategic shift. What does that mean?
They're moving beyond just being a freelance marketplace
Okay, so what's the new vision?
to become a comprehensive work platform.
Ambitious.
Definitely. They're integrating AI even more deeply,
Interesting.
developing tools to manage entire projects, and trying to attract higher quality buyers.
So aiming for the big leagues?
But it hasn't been without its hiccups.
Oh, what kind of hiccups?
There's been some pushback from sellers, particularly regarding their new level system.
What's the issue with that?
Well, it relies heavily on AI metrics, and some sellers are worried about things like unfair account suspensions.
And potential bias in the algorithm.
Exactly. And there's been a call for more transparency.
So it sounds like Fiverr needs to find that balance between innovation and keeping their freelance community happy.
Absolutely. That's a crucial part of their success.
To their credit, management does seem to be committed to open communication.
Yeah, they're regularly holding investor calls, sharing financial reports, all that good stuff.
Transparency builds trust.
It does.
Okay, so let's shift gears a bit and talk money.
Let's dive into those financials.
What's the overall picture of Fiverr's health?
Well, right now, their market cap is sitting at $1.18 billion.
Okay.
And they have a price-to-earnings ratio of 131.91.
For those of us who aren't financial experts, what does that even mean?
That PE ratio might seem high at first glance, but it's important to remember Fiverr is considered a growth stock.
So investors are looking at their future potential, not just current earnings.
Precisely. And their revenue has been growing steadily, around 7% year over year.
Okay, not too shabby.
Though that pace has slowed down a bit recently.
Something to keep in mind.
But one bright spot is their gross margin, which is really strong, like 82.65%.
Break that down for us.
Basically, it means they're keeping a healthy chunk of their revenue after covering the costs of providing their services.
So they're efficient.
Now, their operating margin tells a different story. It's actually negative.
Negative. Does that mean they're losing money?
Not necessarily. It just means they're investing heavily in growth initiatives.
Like marketing and R&D.
Exactly, trying to capture more market share.
So short-term pain for long-term gain.
That's the idea.
Okay, so what about actual profitability? Are they in the green?
They did become profitable in 2023. Their net margin was 2.67%.
So a turning point.
Potentially. But it's worth noting their earnings have been inconsistent in the past.
Why is that?
Fluctuations due to marketing investments, and the overall economic climate.
Volatility is something to consider.
Absolutely. And they don't currently have a dividend policy.
Meaning?
They're reinvesting those profits back into the business to fuel further growth.
Makes sense for a company in this stage.
Now, in terms of debt, their debt-to-equity ratio is at a moderate 1.43.
So manageable debt.
Yeah, not alarming. And their free cash flow is looking good, $79.47 million over the last 12 months.
Strong cash flow is always a good sign.
And remember that network effect we talked about? That plays a big role in their financial strength, too.
The more users they get, the stronger their financial position.
Exactly. So, overall, Fiverr's financial health is a mixed bag, but with a lot of potential.
Lots to unpack there.
Definitely.
All right, cooler hand. That's it for the first part of our Fiverr deep dive.
We've covered a lot of ground.
We've explored their business model, their management, and their financial health.
Tried to give you a really good foundation.
Now in part 2, we're going to be tackling market sentiment.
Looking at what the experts are saying about Fiverr.
We'll also be diving into their ownership structure.
And breaking down the risks involved.
Plus, we'll reveal that surprising end hook we teased earlier, the Fiverr and AI connection.
Don't miss it. Ready to dig into market sentiment.
Yeah, because numbers only tell part of the story, right? Like, what do the experts think about Fiverr's future?
Are they optimistic, pessimistic, or just kind of like, eh?
Give us the scoop.
Well, it's kind of a mixed bag, actually. The overall consensus rating from analysts is a moderate buy.
So not a resounding endorsement.
Not exactly, no.
What are the hang-ups?
Well, the range of price targets they're giving is pretty wide.
What do you mean?
It goes from like $25 a share all the way up to $39.
That's a pretty big gap.
It is, and it suggests that, there's some uncertainty about where Fiverr's going.
So what are the analysts worried about?
Well, remember how we talked about Fiverr's revenue growth slowing down?
Yeah.
That's definitely on their radar.
Makes sense. Slower growth always makes people nervous.
And then there's the issue of active buyers on the platform.
What about them?
They've actually been declining lately,
Oh, so fewer people are using Fiverr to find freelancers.
which could be a sign of, trouble down the road.
Not good.
But it's not all doom and gloom.
Okay, there's got to be some good news, right?
Absolutely. Their Q3 earnings were actually really solid. They beat expectations.
So they're still performing well.
Yeah, and they recently announced a share repurchase program.
What's that?
Basically, it means they're buying back their own stock.
And why would they do that?
Well, it usually signals that they believe their stock is undervalued.
Okay, so they're putting their money where their mouth is.
Yeah, and it can be seen as a vote of confidence in their future prospects.
So some positive signs amidst the concerns.
It's a bit of a roller coaster for sure.
Okay, so sentiment is a bit all over the place, but let's talk about who actually owns Fiverr.
All right, ownership structure.
Yeah. Who are the major players holding the stock?
Well, as of late 2023, the majority of Fiverr shares were held by institutional investors, around 68.3%.
So big institutions are betting on Fiverr.
Yep. Some of the key players include Wellington Management Group, Capital International Investors.
Big names.
When it comes to insider ownership, it's a bit more moderate, around 14.33%. What does that tell us? It suggests that management has, skin in the game.
Their interests are aligned with the shareholders.
Exactly, and that's usually a good sign.
Okay. Anything else notable about Fiverr's ownership?
It's actually quite dispersed. No single entity has a controlling stake.
So it's kind of spread out.
Yeah, the top 14 shareholders combined only hold about 50% of the stock.
Interesting. A lot of different players at the table.
And we can't forget about the freelancers themselves.
Right. They're the ones who make Fiverr work.
Over 400,000 of them.
A massive community.
And their satisfaction is key to Fiverr's success.
If the freelancers aren't happy, the whole platform suffers.
Exactly. Okay, so we've looked at sentiment, ownership. Now let's get into the risk assessment.
Time for the SWOT analysis.
All right, starting with the strengths. Fiverr's brand recognition is a huge asset.
No doubt about it.
They're the leader in the online freelance marketplace.
They've got that name recognition.
And their service offerings are incredibly diverse.
We've talked about the 550 plus categories, something for everyone.
Global reach is another major strength.
Tapping into talent and clients all over the world.
Their platform is also super user-friendly,
Easy to navigate.
both for buyers and sellers. And they're always integrating new technologies.
Like AI.
Right, trying to make the experience even better.
Okay, lots of strengths, but what about weaknesses?
One of the biggest ones is their reliance on that commission-based revenue model.
Meaning?
If the volume of transactions on their platform drops, their revenue takes a hit.
So they're dependent on a steady flow of business.
And they're facing some fierce competition.
We talked about Upwork, TopTall, and all those other players.
It's a tough market.
And then there's the challenge of maintaining consistent service quality.
Yeah, with so many freelancers on the platform, it's hard to ensure everyone meets the same standard.
And you've always got the risk of fraudulent activity, disputes between buyers and sellers.
It's inherent in any online marketplace.
So some vulnerabilities to consider.
But let's not dwell on the negative. What about opportunities?
Where can Fiverr go from here?
Oh, there are tons of possibilities.
Like what?
They could expand into new markets, offer even more specialized services, leverage AI to enhance their platform.
And with the rise of remote work, the demand for freelance services is only going to increase.
That's a huge opportunity for Fiverr.
They could also partner with big companies, offer enterprise-level solutions.
Tapping into a whole new market.
The sky's the limit.
It really is.
Okay, but of course we have to talk about threats.
Right. What are the challenges on the horizon?
Well, a global economic downturn is always a risk.
Absolutely. If businesses start tightening their belts, freelance spending might be one of the first things to go.
And we can't forget about AI disruption.
That's a big one. If AI becomes sophisticated enough to replace certain freelance jobs, that could have a significant impact on Fiverr.
They need to stay ahead of the curve.
Competition is also going to heat up. They need to keep innovating, improving their platform to stay ahead of the pack.
What about the regulatory landscape?
That's a challenge, too. Different countries have different rules around gig work.
And for a global platform like Fiverr, that can be a headache.
Compliance is key.
And we can't forget about the risk of security breaches. Data protection is crucial these days.
Absolutely.
One final threat to consider, the potential for negative feedback.
Right. If buyers or sellers start having bad experiences and voicing their complaints,
That could damage Fiverr's reputation.
they need to make sure they're keeping both sides happy.
It's a balancing act.
For sure.
All right, cooler hand. We've really dissected Fiverr from all angles.
Business model, market sentiment, ownership, risk assessment, the whole 9 yards.
But remember that intriguing link between Fiverr and AI we teased at the beginning.
It all comes together in our final point.
So we've talked about how AI could be a threat, like replacing freelancers altogether.
Right, that's a common concern.
But what if it's not that simple?
What if AI actually creates more opportunities for a platform like Fiverr?
Okay, now you've got me intrigued.
Think about it.
Lay it on me.
As AI tools get more powerful, they could actually lead to new categories of services on Fiverr.
New categories, like what?
Imagine freelancers specializing in, like, training AI models
Oh, interesting.
or offering AI-powered marketing solutions.
So instead of being replaced by AI, they're using it to offer even more specialized services.
Exactly. It's not human versus machine, it's human plus machine.
I like that, yeah.
The possibilities are pretty much endless.
Give me some examples.
AI-assisted video editing, music composition, content creation, you name it.
So AI could actually enhance the value that freelancers bring to the table
Absolutely.
instead of diminishing it.
Right, and here's another angle.
Okay.
AI could make Fiverr's platform even more efficient.
Oh, so.
Imagine AI tools that help freelancers manage their workflow,
Okay.
automate tasks, and connect with the right clients faster.
Streamlining the whole process.
Exactly, so Fiverr becomes even more attractive to both buyers and sellers.
So AI isn't necessarily the enemy,
It all depends on how it's implemented.
and how Fiverr adapts to these changes.
Exactly. So, cooler hand, what does this all mean for you?
Yeah, we've thrown a lot of information your way.
We've looked at Fiverr's business, the market sentiment, the ownership structure, the risks, and the opportunities.
Fiverr is at a crossroads.
Facing challenges, but also embracing some really interesting new possibilities.
The gig economy is booming, there's no doubt about that.
And Fiverr is in a good position to capitalize on that growth.
But those risks, especially AI disruption, those are real concerns.
They are, but as we've discussed, AI could also be a catalyst for growth and innovation.
So it's all about how Fiverr plays its cards.
Adapting to the changing landscape, staying ahead of the curve, and continuing to provide value to both freelancers and clients.
That's the key.
So, cooler hand, and to all our listeners, what do you think? Is Fiverr a buy, a hold, or a sell?
Let us know in the comments below.
And if you're hungry for more deep dives, drop your stock suggestions too.
We love hearing from you.
And don't forget to subscribe to the Stock Analytics AI YouTube channel
For even more in-depth market analysis.
helping you make more informed investment decisions.
But as always, remember everything we've discussed is for informational purposes only. It's not financial advice.
Do your own research, talk to a financial advisor, and make informed decisions.
That's right. We're just here to provide you with the information.
Thanks for joining us on this deep dive into Fiverr.
And we'll see you next time.